Hello and welcome to Fund to Money. Here we will be talking as to why this is the right time for you to consider investing in multi-asset allocation fund or multi-asset fund. Now, multi-asset allocation fund or multi-asset fund, they invest at least 10% of the money in three different asset classes. That's the definition. But the larger point is the reason why it is becoming relevant is there's a lot of talk that's happening that after equity markets having hit such highs, there could be a correction, and there's this whole section of people and media were talking about a possible correction, and they probably are getting a little scared of markets hitting a new high every now and then. But multi-asset allocation fund, what it does is it makes sure that your growth of your investment is not affected by the risks in that particular in any particular asset class. So if you have invested totally in equities, then there are risks associated like the market correction, volatility, and global events and what have you. So it makes sure that you're not affected by a certain developments in a certain asset class. It gives you a whole host of other benefits. You should be investing in multiple asset classes in any case to manage the risk. Have a good portfolio, diversified portfolio which manages risk. So what you would normally get by investing separately in say equity, debt, gold, etc. You get it through a multi-asset allocation fund, and this is, of course, we're going to tell you why this is the right time. We're going to also talk about the features, what you should be looking at, and some of the benefits. Okay, so that's coming up in a short while. But let's give this whole thing discussion a little bit of context, right? So one of the classic problem, apart from which is the best investment that you want to make, there's also a larger problem. Which asset class should you be investing in? Yes, of course, equities do well now and then, but they don't do well every time, and there are asset classes which do better. So now let's look at how things have moved since 2010, right? So 2010 and 11, gold was the best performing asset class, right? Then the next 3 years, which is 2012, 13 and 14, it was equities. 2015 and 16, it was debt. 2017 again it was equities, and believe it or not, 2018, 2019 and 2020, all the 3 years, yes, gold again was the best performing asset class. So if you are investing in any one particular asset class, there's a pretty good chance that maybe 2 years you can have a good run, and maybe the third year it's not going to do well. But when you're trying to save large amounts of money in the long term, you cannot really have an off year. Every year you need growth. So what is the way out? You need to invest in all of these in a smart way. If you want to do it individually, you may not have the time or expertise or the information to do it. So that's where multi-asset allocation fund or multi-asset funds come into the picture. So what are the benefits? What are the features? What are the things you need to take a look? We'll be discussing them, all of them, but that's coming up in just a little while. Welcome back. Welcome to Fund to Money. We're discussing multi-asset allocation funds or multi-asset funds. Why this is a great time for you to consider. If you have already not bought a multi-asset allocation fund, this is probably a great time. And of course, we've given you a context that there's this whole fear. Lots of people who have been investing in equities direct into equities, as in direct shares or equity funds or equity oriented sort of funds, and where the huge portion is equities, and some of them are fairly high risk, small cap sort of a investment, or mid cap kind of a thing, which is on the high risk spectrum. So now this whole apprehension as markets hit a new high every now and then, what if the market corrects. So when you are investing in something like a multi-asset allocation fund where at least 10% of your money is invested in 3 asset classes, what's number one thing that's happening is your risk is getting managed. So any development which is pertaining to one asset class, it cannot upset your progress in the future towards your future needs. And there are other asset classes which provide you that compensating sort of return. Of course, as we are going to argue later, you still need to be mostly in equities, because that provides the greatest promise in long term. That's what has been seen. So it has to be an equity oriented asset allocation fund where 65% or more is invested in equity. So number one is the risk, and of course it's not just about equity. The risk comes from other asset classes. So in each asset class there are risks, and they can be managed. Now for equities, it's market being volatile, there could be concentration risk. So if you're into mid cap or small cap or a particular theme, you have a concentration risk. There's markets are volatile. Those are some of the things which are related to equities. Then of course in debt, it's interest rate, credit risk, basically repayment risk, and then also liquidity risk. All these risks are there. In gold, it could be tax inefficiency, not enough growth. Of course, in the last 10 years, there have been like 4 or 5 years when it's done so well. However, there have been long periods in the 80s and some other periods of time when they haven't moved at all, 2 or 3% annual growth. So all these problems are there, and so when you have a mix, then you get a far better result. Now it's worth pointing out that studies have indicated that more than 90% of your long-term returns get determined by the mix of your assets. So equity, debt, gold, real estate, whatever you are putting together, that mix itself is determining 90% of long-term returns. And then of course fund manager and your investment skills and other things come into the picture, right? So number one is risk, that's getting managed. You don't have to track or track the market movements. You don't have to track performance. An expert is doing it for you. The expert has got far better idea of these investing asset classes. It's being done for you. You automatically, the other benefit is you automatically are creating a portfolio which has all these assets. So asset allocation is being done for you. An expert is doing that asset allocation. How much of the money should be going and when it should be going in different asset classes, that's being done for you. The changes are being done for you. So if the market conditions change, that change is being done by the fund manager and expert. So that's helping you. You don't have to lose sleep if markets are going up and down. You can carry on with your life and not be bothered about some of these up moves or down moves. That's happening. It's more cost efficient and tax efficient. So now try doing having separate equity investment and debt separate and gold, right? Suppose there's a change in the market, you want to decrease equities, increase debt or gold or whatever. Everywhere you have to sell, everywhere depending on how much period you've held the investment, you have to pay tax. So if you've held it for in equities for less than 1 year and less than 3 years in debt and gold, it's short-term capital gains tax which is high, and it's lesser for more than 1 year, and for equities and for debt and gold it's 3 years, right? So it's you gain out there as well. Then the other thing is that there's an ease of investing. So you can invest regularly through systematic investment plan, which is what a mutual fund allows you, or you can invest it in, through a lump sum, which is systematic transfer plan, right? There's an ease of use also. So you can use a systematic withdrawal plan where you get once this money is ready, you've come to an end. So it's of course multi-asset allocation funds are great for long-term goals, retirement, children's higher education, anything which is long-term. So when you're talking about long-term, we're talking about 5 years more, typically 8 to 10 years. That's what we're looking at. On the minimum, it has to be 3 years, because that's how it will become tax efficient. So that's something that you need to keep in mind. So SWP, systematic withdrawal plan, allows you to have regular inflows coming in. A regular amount comes in with the sale of units, and it's structured typically in a way that it is tax efficient. Now, dividends, of course, are taxable, but if it is equity oriented multi-asset allocation fund, then it will be taxed like an equity fund. So less than 1 year 15%, more than 1 year exceeding 1 lakh annual capital gains, it's treated like a long-term capital gains. Long-term capital gains tax of 10%. We have had these discussions, so we need not go through them in detail. If it's debt oriented, 65% or less in equities, then less than 3 years, it's treated as short-term capital gains, and taxed at income tax rate, short-term capital gains tax. And then long-term capital gains is there's an inflation indexation and of the units, and of course 20% long-term capital gains tax. So this roughly takes care of some of the major things that features of asset allocation fund, multi-asset allocation fund. What it actually does is it provides you with long-term capital appreciation. It's great for long-term needs. And one of the things it does, asset allocation fund, is it gives you the best of each asset class. So it tries to give you the best of equities, best of debt, best of gold, and you are being able to do it thanks to the fund managers. So that's an important thing. Now, some of the consideration, of course, you're going to look at the risk through the riskometer. We've had a discussion giving the links. You're obviously going to look at the scheme information document, SID. Those are given. You're obviously going to look at the performance over different periods of time, 1, 3, 5 years, etc., etc. So those are given. But suppose you just want flexibility in equity and debt, and you don't want to get into other asset classes, then maybe a balanced advantage fund might be better. Then it has to be a long-term goal. If there's a long-term goal, say retirement, child's higher education, or something like that, which is on the longer side of the investment horizon, and it starts working better. So these are some of the major things that one needs to keep in mind when one is looking at a multi-asset allocation fund. But the topic was why it is important now, because whenever there is this fear of things correcting, going down, or some other asset class suddenly starting to do well, instead of moving from one to the other. We have had enormous number of queries where people have said, should we sell everything and go into, say, gold, or should we sell everything else and get into equities? You don't need to do that. It's not either or. You can have a happy mix of all of them and get the best out of them. So we hope you found this useful. If you liked it, hit the like button, share it with others, and subscribe to our channel. Till the next time, take very good care of yourself, and goodbye.